First of all, there's all kinds of distressed situations happening all the time. I mean, there's 9,300 odd U.S. headquartered public operating businesses. The majority of them are micro to mid cap. I think there's maybe only 5% of the market are 10 billion and above. So there's all kinds of things happening all the time. And I think the first step is to think through, what is your competitive advantage? What are you going to be able to look at and understand effectively? And so what we do is we tend to follow specific industries, and sometimes when an industry has a shift or it evolves, or there's a major change, let's say, in an industry, when there's a lot of negativity around an industry, you're going to have businesses within that industry that kind of pop up that present themselves as distressed. So I think the first step is to know multiple industries relatively well, and industries that you feel like you can get your arms around, that you can rely on contacts, that you can kind of build your knowledge base around. And so when they do ebb and flow, you can be there to kind of quickly look at those industries and pick out the scenarios where maybe the baby has been thrown out with the bathwater. That's probably the first way. Secondly, you find one-off situations. It doesn't necessarily have to be a whole industry sell-off. There are one-off situations that happen all the time. And again, within industries maybe you're following, or you hear about through just reading. We read all the time. And lastly, maybe there's situations you hear about through other fund managers or through publications like yours, or just screening for maybe non-traditional financial matrix.